But I think we could be coming up to a period where it may actually matter. We could get some real disruption around the election. We could have a event we couldn't foresee. I mean, I didn't expect a week ago Saturday that, they were going to try to assassinate Trump. I mean, what would have occurred had they been successful? Or you could pick a group of other events. So it's when the event occurs that precipitates selling, and the underlying bid of the passive isn't big enough to help swamp that. And if the passive side was in a selling mode because employment had drifted lower, you could have a big accident. You could have a crash in the market. Now, I'm not saying it will happen. I'm just saying it's a bigger possibility than people think, and not tomorrow, but in the next couple of years. And so you just have to be aware of that, and then you have to look to events. So you have to monitor employment, not just from what economic standpoint, but what it also might mean for that. There's a fellow named Mike Green. I don't know if you've interviewed him or you know him or your readers do. He's the one that brought this to my attention. I mean, I found it out because of him about 4 years ago, and it's made a huge difference in my ability to figure out how to manage my risk or how much I can take and when I should be careful. It hasn't led to any large scale risk reduction yet, but it's something you have to be aware of. I mean, it's a big deal.